Not every hidden giant moves in a straight line. Case in point, as I'm literally sitting here writing this, Jumia's stock jumped 10% on earnings. Losses narrowing, Nigeria growing, the whole story. Sounds like a win. Might be. But I'm not here to tell you whether Jumia is good or bad. Maybe I am. But this is a good example of some of the real volatility you can expect when holding a stock like this. Of course, a jump 10% in a day, it's a lot better than a fall 10% in a day. I'm Edward. This is Money Beyond Borders. If you're new here, a quick version of why this show exists. I keep noticing serious people, Jeremy Grantham, Scott Galloway, the late Charlie Munger, Goldman Sachs' own chief global equity strategist Peter Oppenheimer, all separately pointing to the same thing: real opportunities outside of the US most people have never heard of. I'm not here to tell anyone to abandon anything. This is part of my job, finding investments for a small private investment firm. I'm based in South America, and I decided to turn my research into a show that I'm building on my channel, EdwardEffect. Subscribe, please. Expanding beyond borders, literally. Same rule every episode. Funny money, not real money. For anything real, talk to your actual broker. I'm just putting options on the table for people. What people decide to do with their own money is their own call. On the numbers, Oppenheimer's own forecast, published late last year, has the S&P delivering something like 6.5% a year for the next decade. The worst of any major region, with emerging markets at 11%. Shorter term, the trend backs it up too. Emerging markets are still running over 45% over the last year, way ahead of the S&P. But emerging markets isn't one trade. It's dozens of very different countries, currencies, and companies. And some of them can get rough. That's today. Worth remembering that even inside of an opportunity, the ride can get rough before it gets good. That's this episode. Jumia, often called the Amazon of Africa, got a lot of Amazons. The real one's a river in South America, but besides the point. Jumia trades on the New York Stock Exchange under the ticker JMIA. It's an e-commerce platform operating across multiple African countries. Real numbers, so you see exactly what small cap means here. Market cap sits under $1 billion. Compare that to Mercado Libre's $90 billion. So this is a completely different risk category, and the volatility is not theoretical. This stock's beta, the measure of how much it swings more than the market, is over 2.4, which means it moves at more than twice as sharply as the broader market in general, in either direction. Over different recent stretches, depending on which window you look at, the stock has been down over 40% in the year or up over 100% for the year. Same company. That swing in either direction inside the same rough period, that's what real emerging market volatility looks like in practice. The important part of this story, African e-commerce is a real under-penetrated opportunity. Same basic logic as Latin America or Southeast Asia. Jumia's actual targeting profitability now, break even by the end of the year, fully profitable by next year, according to their own guidance after years of losses. This is showing up in the numbers. Jumia reported second quarter earnings this week, and the stock jumped over 10% because of it. The loss narrowed 36% to $8.7 million. Gross profit was up over 28%, and Nigeria, their biggest market, grew GMV 36% year over year. They also just raised $50 million, anchored by the International Finance Corporation, to fund their last stretch towards that break-even target. But they're not there yet. And thinner logistics infrastructure and currency volatility across the countries they operate in have made it a tougher road for them than with Melli's or Caspi. This is a good moment to explain what emerging market risk means in practice, instead of just saying the phrase. Currency risk. If the local currency drops against your dollar, your business can get wiped out even if the business itself is doing fine in local terms. We don't just tell you the good news here on Money Beyond Borders, we tell you what you need to know to make your decision. Liquidity risk. Smaller companies like this trade less, so prices can swing harder on less news. Execution risk. Building delivery infrastructure across multiple African countries is a much harder operational problem than doing it in one country like Brazil or Colombia. None of this means Jumia is a bad company or a bad bet, necessarily. It's a different risk category than everything we've covered so far. So we're not going to pretend otherwise. Now, to the paper portfolio and check in on some new bank news. Let's look at the chart because the numbers I just gave you don't really capture how wild this one-year stretch has been. If you zoom out, you can better see the volatility. Like a year ago, this stock was sitting around $7 and change. Then it kept running, new 52-week high. Another one in September, up to 12.46, October. And at this point, it was up something like 550% over 6 months, 200% year to date. It kept climbing all the way through the new year. 52-week high around 1462, right around when the profitability story was really cranking. Then it gave it all back. Almost. There's no single blow-up headline. The market just decided a sub $1 billion African e-commerce company, stock running at 550%, didn't deserve that price anymore. Ground down for months all the way down to 569. The 52-week low, basically where it started a year ago. You zoom out, you can really see that volatility. So I've decided the news is too volatile to add this stock to our paper portfolio, but it is an excellent example of checking, the volatility in the emerging market stocks. So we're not adding today, but we are checking our previous ones, and we have some info. We have some good info today. Caspi's doing well. Melly is still losing. Nubank. This is our news from yesterday. Nubank was our pick from episode 4. They announced the second quarter profits have just topped $1 billion. That's for the first time ever, beating the estimates. Let's switch to that stock. Maybe you can hear the guy buying and selling computer parts outside from a megaphone. If you don't believe I'm in South America, there's your proof. It's annoying for a content creator. Everyone seems to have a business here in Medellin, and I just found out the co-founder of Nubank is from Medellin, David Velez, so there's another Colombia tie for Nubank. As I said, I'm not putting Jumia in the portfolio, so there's no buy this episode, just about showing what higher risk looks like. That's episode 5. Next episode, some of the smartest short sellers on Wall Street spent a decade betting against an entire country. I'll tell you why they gave up. I'm not a financial advisor, and nothing here is personalized financial advice. This research is part of what I do for work, and sharing it publicly does not turn it into a recommendation for your money. Nothing here is a recommendation to buy or sell anything specifically. This is research, frameworks, and a paper portfolio. Not real money, not a track record. Talk to a licensed professional before you do anything with your own. See you next episode.